my so-called June $10,000 challenge is officially over. Despite everything that I've said about adhering to rules, I managed to blow up my account in less than an hour yesterday morning. I'll show you exactly what I intend to do about it and how I'm going to respond to this straight ahead. Okay, I'm not going to drag this out. My goal today is to simplify this as much as possible. I believe that I'm a victim of my own overanalysis and trying to accomplish too many things in a very unreasonable way. So I'm going to bring up a slide here just to keep myself organized. Essentially, this is all about how to cope after blowing up an account. And when I say blowing up an account, I don't mean I lost all my money. I mean that I allowed my account level to drop below the $25,000 PDT rule, which prohibits you from active trading. So at the top of the agenda is cure that problem. The second part is the mental discipline and what my market expectations actually are. And I believe that narrowing my focus is the key to my success here. And I'll give you an example. When, at New Year's Eve or on New Year's, people make New Year's resolutions. And sometimes they're simple and sometimes they're very ambitious. But if on New Year's, I decided, all right, you need to drop 40 pounds, you need to quit smoking, you need to quit drinking. So I'm going to work out at the gym more. I'm going to spend more time with my kids. I'm going to buckle down at work. And then you come up with all these things. That's absolutely an impotent New Year's resolution list. There's no way you're going to accomplish all those things. Now, if on New Year's you said, my resolution is I'm going to eat right and I'm going to drop 40 pounds. That could happen. It's going to take a little bit of work. But if you're going to try to do that and quit smoking at the same time, well, you got a heck of a challenge. And try to do that, quit smoking at the same time, get into the gym. I'm trying to focus on too many things. And so for me to just say I need to pay attention to my rules, I need to adhere to my rules. Well, there's a lot of rules. Don't overtrade. Don't take too high of a position size. Keep tight stops. And the list goes on. I want to narrow my focus to the one thing. Well, first of all, we'll go over what my plans have been. What my rules have been. First of all, I have a $500 max loss per day, which magically on my red days, I don't seem to be able to keep my losses below that. So that's an issue. My $300 max loss per trade, again, another issue. Sometimes I do it, sometimes I don't. 3 max consecutive losses. That doesn't happen an awful lot, but that's another one of my trading rules. Another one is 4,000 share max position size, which I'd like to reduce to 2,500. We'll get to that in a minute. Also, 10 trade per day limit a 10 trade per day limit. I should be reducing that to 5. 10 trades, that's over trading. For the type of trading that I want to do, if you're out there doing it 10 times, to expect yourself to find 10 perfect setups in the same day is completely unreasonable. It's just unreasonable. It's because I enjoy trading. I enjoy putting a trade out there and managing it. And what does managing it even mean? How do you manage a trade? Make sure it doesn't lose a lot of money? Well, I guess I haven't been managing them too well. And then $1,000 gross profit limit per day, reducing that to $750. To narrow my focus, I think the one trading rule that if I focus on that, and just that, maybe 2, but 1 for sure, that can mitigate my losses without preventing me from being profitable, is to take smaller size. The disaster that happened to me yesterday happened with 9,000 shares of a stock that I was on the wrong side of. And the worst part of that is, how can I explain this? Because of the size, it made the problem so debilitating that it's like throwing a toxic sauce into your attitude. And it just compounded, and bad became worse, and worse became devastating. So smaller size, even the problems, even the mistakes that you make aren't as amplified. So what I've done to try to discipline myself, which really this is beyond discipline. The discipline is involved in doing this, which is I can set a max position size on my trading platform, but I could very easily, with 3 clicks, go in and remove that. So I'm starting with that, and I can't be totally surprised if I were to go in and change that just because I get aggressive. So the idea is to step away from any type of aggressive maneuver. I have no business. I am entirely too early on in my development as a trader to be taking size like that. The second thing is hard stops. This is something that I have bought into the belief that when you have a hard stop, that market makers can see it, will turn the market around to go and stop you out and then resume together. I've read a couple of articles and I've really given it some thought. And I think that is one of the most preposterous ideas I can possibly imagine. Now, hard stops are a problem if you're in a very volatile stock and you know that it's going to be volatile. The point is that stops and size can work together harmoniously to manage your risk. And we'll talk about that here in a minute. So what I want to focus on as I move forward, and it's going to be starting tomorrow because I can't trade today. I had to cure my account today. So this begins tomorrow, is to focus on the process. And I believe that businesses in general have 3 major components: the people, the process, and the product. Well, the people in this case is yours truly. The product is money. It's very linear. There's nothing I can do to the product to improve it. And there's not a staff of people that I need to deal with. It's just myself. The one thing that I have the most control over is how the people approach the process and what the process actually is. So I've broken it into 3 areas. One is the idle time that you spend in the market. One is the readiness time when you're preparing to get into a position. And one is the active trading portion of it when you're getting in and getting out of a position. The idle time I've broken down, to keep it simple, into stock selection and finding my setup. Now, stock selection applies in my case more to the small cap stocks that I may or may not consider. And I learned stock selection taking the Warrior Trading Pro class with Ross Cameron, which I've said it before, I'll say it again, I think is absolutely brilliant when it's used properly. But small cap stock selection, the first criteria is the price is between $2 and $10. Over $10 is too expensive. Below $2 is too risky. The stock is gapping up more than 4%. And we've seen this when I've put my gap scanner up on the screen. That is a list of all stocks gapping up or gapping down more than 4% in the U.S. markets. The third thing is that the stock has a meaningful catalyst. It has a meaningful reason to move. It's not just some technical breakout or a bunch of exuberant day traders pre-market. That the stock is gapping up for a meaningful reason that others will know and see and cause them to gravitate toward that stock and move the price. The fourth criteria is that the stock has a low float. And this relates to being a long bias trader in the small caps, which honestly in small caps shares are very difficult to borrow. You almost have to be a long bias trader for the most part if you're going to indulge biotech stocks and other small cap stocks that move with some meaningful validity. But they need to have a low float. And what that means is the float is the amount of shares that are available on the market to trade. And when the supply of those shares is low and demand steps in because it's gapping up, because the stock has a catalyst, it will tend to move that stock very quickly, giving you the opportunity to capture profit in the market. So the criteria is less than 10 million shares outstanding. If you look at a stock like Bank of America or even AMD, you're talking billions of shares that are available to trade. There's an incredible supply of shares for somebody that wants to go long in that name. When the float is very low, sometimes below 1 million shares, the stock will move very quickly because there just isn't the supply to meet the demand on a catalyst day. The next criteria is no nearby resistance that's going to interrupt this process. In other words, no daily resistance from previous days that might interfere, and no moving averages looming just overhead. And of course, the queen mother of some of these is the volume. That other traders are looking at it, other traders are trading it, and it's likely to be very liquid, easy to get in, easy to get out, and of course, experience the price movement that you want. So that's stock selection. My setup, the third part of this idle process, and stock selection can take place even pre-market, but it's trading the right stock is just as important as trading the price action. Finding my setup, well, I've got two. I have two setups that I know statistically by looking at my metrics, because I log every single trade that I make using my morning Scalper software. But I have two setups. I have my primary setup, which is used predominantly in the small cap stocks, is the first 1 or 3 minute candle to make a new high after a resting candle. And this is an example of it. And in this case here, you have a move up and then a pullback. You have two resting candles here. And I call the high of that resting candle, or in this case, another resting candle, the apex point. That's the trigger point. As soon as the price action resumes in the direction of this trend and crosses over that apex point, that's your entry to go long. All of this can be flipped in reverse for a short bias trader. But in the case of small caps, this would be the play. So that's setup number one. And this is what I need to spend most of my time searching for while I'm in the market. The second trading strategy is my MACD Bollinger Band momentum play, which simply says when the MACD's Bollinger Bands, again, these are Bollinger Bands that are not based on the price action, it's based on the MACD itself. And the Bollinger Bands records the volatility in the MACD 2 standard deviations above or below the 20 moving average of the MACD. And when they squeeze together, like you see here, that's volatility reducing, or a form of consolidation. When they begin to open up and the MACD is riding those bands, my indicator that I've created will turn that MACD level red. When a MACD level closes red and you find yourself forming the next MACD level, which would be this candle right here, that's your trigger, in this case, to go short. The same thing works in reverse to go long. And then it proceeds down. The exit strategy that has historically worked for me has been a candle in the time frame that you're using that makes a new high. So this particular play here, none of these 3 minute candles made a new high. Came close here but didn't. Came close here but didn't. Came real close here but didn't. Continued to drop until right here. This would be your exit point, giving you a nice, this was AMD from a couple weeks ago. But I mean, you're talking almost a 30-cent move over the course of a half an hour. And the other exit indicator would be when these begin to pull away from the Bollinger Bands and turn gray again. So this is my second setup. This setup here, though, and we were talking about overtrading, this particular setup will maybe happen once a day, sometimes twice a day in one of these large cap stocks. So to trade this 10 times is absurd. It's obscene. It's completely overtrading. So this is why I want to reduce my number of allowable trades each day to 5. So the next thing is trading rules, and this is where I want to really narrow my focus. And again, like I said earlier, what is the one or two things that I can focus on mentally without the rest of the clutter to mitigate my losses without preventing me from actually making money? And the logical thing is smaller position size, 2,500 max share size per trade, period. The second thing is hard trailing stops. So and I'm going to talk about the algorithm here in a minute, how I'll determine what my stop should be. But hard trailing stops based on the max risk of $300 per trade. So what I've done is I've created I had an indicator which I call my apex indicator, which shows you the high and the low of the previous candle that you're in. So in this particular case here, this happens to be the SPY, which I don't typically trade the SPY, but I had to create a chart to make this slide. If I were going to trade this to the downside, and for some reason this was my apex point, I would wait until this candle penetrated this, and then the 28.58 would turn red. But what I've added now is this number here, which is the size of the previous candle, because I believe that the previous candle needs to represent my stop, at least for the time being. In these type of trades, I need to know precisely when to get out. So there's two things being established here. One is my max size. Now this number here is part of this indicator. This is all the same indicator. This is taking my, it understands that my max risk is $300 per trade. It knows that my buying power, I don't want to use more than $100,000 of buying power. No more maxing out my buying power. This is all part of keeping size reduced. But in this particular trade here, it knows that I could take 346 shares and with a stop of 28.84 or 26 cents. So I would need a 26-cent stop at 346 size to go short in this trade. I hope that makes sense. I think it's easier to understand than it is to explain. I'm getting two bits of information: the size of my stop and the size of my position. And they're going to be very linear. No more guesswork. Now, I don't have a hot button that buys 346 shares or shorts 346 shares, but I have a button that buys or shorts 300. So I will err on the side of conservatism and press the hot button on my keyboard that falls just below this level. So size and stops will be my focus going forward as we progress tomorrow. So that's it. Beginning tomorrow, there is no $10,000 challenge. There is no profit target per day. There is simply trading to trade well, becoming a more disciplined trader, again, by narrowing my focus on two areas of my trading. Number one is my position sizing and adhering to my position sizing algorithm, which I've delegated to an indicator on my charts, and my stops, having hard stops on every single trade. And of course, stopping when if I'm down more than my max loss. But again, I've delegated that to my broker too. So if you think this is interesting and you want to see how I do, if you want to learn with me and grow with me as I progress through this, go ahead and click subscribe, and we'll do it together. If you found anything about this video useful or informative, go ahead and click like and subscribe below. And if you'd like to be notified when I upload new videos or new content, click the little bell symbol right next to the subscribe button, and you'll be notified every time I upload a new video.